Hello, Martin. Welcome to the Business Podcast. It's a pleasure to have you here. How are you today?
Hi, Michele. I'm very well. Thank you very much for having me.
It's a pleasure. It's a pleasure. Would you like to give us a little bit of introduction of yourself as a professional and, of course, of Skaleet as a company?
Of course. So I'm the CEO of Skaleet, which is a leading edge and core banking platform. We are building the future of banking technology. I've been myself running the company as a CEO for the past 2 years.
Mhm.
Initially, I was part of the investment firm, which sourced, executed, invested, and managed, in a way, the company as a board member. And when it came to transitioning one of the founders to retirement, I was more than happy to switch my investor hat for an
Mm,
operating one. And I'm very proud operator now. I have, let's say, a pretty financial services oriented background, as you can imagine. Over the past 12 years, I've been operating at the frontier uh, between financial services and technology as an investor, operator, consultant, and banker myself. And as part of that, I've seen, let's say, good and bad things, in particular with regards to IT. And this is why I believe there is a need for a change. And this is a change we are driving forward together
mhm.
with Skaleet.
Yeah. So, first of all, it's a very interesting kind of background, switching from finance to operation itself. It's not easy. It's not always easy. So you were working in an investment banking or more in a VC role? Which kind of financial background it was?
Yes, I was working for a growth equity
Mm,
investor
okay.
uh, out of New York, where we had an investor owner type of thesis
Mhm.
with a very strong focus on B2B software.
Mm, okay.
Um, and yes, so I just switched. I was very close from the company, very close from the team. I fell in love both with the market opportunity and with the people there, and so quite naturally I became the CEO, which is a pretty interesting move. In particular in Europe, it's not that common.
Mm, yeah.
It happened to be the case a lot in the Silicon Valley back in the days, um, and where we saw like guys switching back and forth from a founder role to
Hmm.
investor role. And by the way, most of the VCs in the Silicon Valley have been created by founders initially, and then they came back as CEOs in a large variety of companies, and then came back as an investor. So I genuinely believe that this back and forth operator to investor kind of switch is extremely interesting. But it's more common in the US, in particular in the Silicon Valley, than it is in Europe.
Yeah.
So from that perspective, I'm a bit of a weird animal in the space, as you might
Yeah, no,
say.
I agree. I mean, it's not very common, like in Europe, to have, people stepping in, mostly as the CIO, because, like, for example, mostly in early stage company, that role is still very much operational. So you get to get your hands dirty most of the time when you're in that kind of stage. So it's not that easy, mostly if you're coming from a very structured and financial company. And how was it, let's say, how was the jump for you? So you're enjoying your time, or you're, still thinking about the old good times?
No, I did. And look, I think like given the investment strategy uh, of the fund I was with, it made the transition, I would say, easier.
Mm,
We were not like either a VC where basically you are taking bets on multiple companies. You trust like a founding team and you diversify your risk.
mhm,
So you write a lot of checks to a lot of people, and it's a lot about assessing the founding team. It's a lot about assessing the market opportunity and really looking at the KPIs for you to invest. We were not as well a very large PE investor
mm,
where it's a lot about financial structuring. It's a lot about LBO structure. It's a lot about financial modeling. It's a lot about lawyers, bankers, and management package structure and a whole bunch of things and board governance. We were just in the middle uh, with a very hands-on approach to growth equity, with a majority flavor, both in terms of governance and in terms of, I would say, involvement in the daily operation. So, as part of the fund, I was very involved with M&A,
Hmm.
post-merger integrations for various companies. I was very involved with go-to-market workshops. How do we transition from that organization model to this organization model? How do we switch from a project-driven, like waterfall organization for one software company into an agile, squad-centric organization? How do we refocus our product roadmap towards an outcome-based approach? So, I've been really like swimming onto those lanes, and therefore the transition was, I would say, a bit easier. One, because I knew the company by heart,
Hmm.
and also because of the nature of the activities I was involved with. Now, that being said, to your question, yes, I enjoyed it and I still do. Um, but it's still hard.
Yeah, I can
It's still
imagine.
hard because, like, it's very different from like believing you know what to do,
Hmm. And
and
actually doing that.
thinking you know what's going on, which you sort of do when you are part of the board. To actually like bearing that responsibility of taking the shots on the ground. um, and everybody told me, you will see, like, CEO is a bit of a lonely job. I was saying, hey, okay, thank you guys. I heard that story before,
Mhm.
but when you arrive at the job, you find out this is actually true, and you have to figure that out. Um, but then you learn how to move forward while that being true, um, and find a form of peace of mind with that reality, which
Yeah,
I
I
did.
think that it's one of those kind of journey when you actually need, from one side, a lot of confidence because, as
Yeah.
you say, these are solo journey. So you need to take the shot on yourself. You need to take decision and you need to be confident on that decision because there will be a lot of people actually trying to challenge them. So it's
Yes.
kind of normal. And at the same time, I think that you still need to accept that you will never know everything and you will never
Exactly.
know all the information. So it's kind of a tricky role, I would say, and it's kind of easier to see that from the external, from a
Yeah.
board, for example, or from the investor side.
Yes. No, absolutely. And there is something also that I like to say, which is that, um, if you take like soccer, for instance, or tennis,
Hmm.
Roland Garros, because I'm French, and in particular soccer. um, when you look at the game
Yeah.
from the side as a coach,
Hmm.
when you look at the game from the top up, as a journalist and comment speaker, like, you have very very different point of view relative to being on the field as a captain,
Yeah.
because you just see like the whole field perspective in terms of how the players are moving, in terms of how the tactics that you design are being in place. And when you are actually on the field running together with the team, it's you have a very different point of view.
Yeah.
And this is what's really really hard, and therefore you need to look um, at people who are in fact uh, on the side of the field, or very up
Yes.
on the commenting side, because you need that balance of perspective to show the light on situations that you don't necessarily see clearly given the perspective you have. And I think having been on both sides, it helps me just do that, because I could see, across the 5 years of investor role and board members that I had, in a lot of cases, the founders, the CEOs, the CPOs, the CTOs, they all believe that you need to be on the field terrain to actually matter. Um, and they tend to overlook
Mm.
uh, like senior advisors or board
Hmm.
members or investors' perspective, because oh, those guys, they're far away from the reality we live through. They like to talk about financial stuff and blah blah, and they always want us to talk to older guys, and I think that's a mistake. And having been on both sides, I tend to try to spend as much time as I can with those mentors, which can be board members, independent ones or financial involved ones, and try to find mentorship wherever you can, even from people who have, in a way, no personal interest in your company,
Mm.
making very little money with you, not necessarily having invested in your business, but who will listen to you with a genuine kind of
Interest.
approach and interest. And if you learn to listen to those guys, you will then translate their wisdom into actions on the ground. And I think that helps.
Yeah. I think that from time to time you need like an independent approach, someone that is not involved,
Yes.
because as long as you work in a company, even if you are, the coldest human being ever, sooner or later you get attached to the kind of things that you do. You get attached to operation, you get attached to the brand, for example, or you
Exactly.
are a little bit biased, And having that
Exactly.
kind of independent approach, someone is not inside helps, but at the same time you also need to have boots on the ground, and you actually need to be involved as much as you can. So having that kind of dual role, I think that is helping a lot under that
Absolutely.
perspective. Yeah.
Absolutely. In particular, in the phase we operate into, which
Mm,
this is not, we are, when you are in the growth equity space, you go about building and scaling up category leaders. Um, so there is always like misbalance somewhere.
yeah, I agree.
Either you have so much growth that you need to figure out how you're going to deliver, and then you refocus your go-to-market, and then you need to figure out how to unlock the next level of growth, how you shift your go-to-market from one point to another,
Yeah.
how do you adjust the value chain down the line, uh, how many
Or you're
people
in
you need
the
to
totally
hire,
opposite
the
situation where
totally
there is
opposite
not enough
situation,
growth. Yeah, yeah,
the people you have to deal with a
yeah.
certain situation, given the fact that your company becomes something completely different almost from one year to another, then your organization as well as your talent mix need to evolve at the same pace.
Hmm.
Otherwise, you have organizational and HR debt, which is very difficult as well.
Yeah.
So you are in a constant moving kind of context, and therefore really like navigating between very top down view. Okay, is what we are doing the right things? Are we focusing on what matters?
Hmm.
um, can we do it faster? Can we do it better? What other people are doing in similar situations, and going very very fast all the way down to translating those ideas or perspectives into tangible initiatives,
Hmm.
and how you create the feedback loop towards the broader framework
Yeah.
is key, I think, to the success of that kind of growth phase.
Yeah. I will not. We will start talking also about the company itself, but I would like to focus a little bit more on this kind of role because I think that you face it probably a lot of different kind of challenges. Coming from a financial operator role to a very operational one, like the CIO. And I would like to understand which was the hardest one in your opinion. I've been doing this kind of conversation a lot, and one of the things that people usually mention under this perspective is always hiring. Uh, you know, Kind of scaling the team is always very, very tricky because you either, hire a lot of people and some of them they're not a good fit, or you spend a lot of time hiring and then you have one person that is actually a good fit, or maybe not. So it's kind of one of those kind of things that are very, very challenging. But I would like to
Yeah,
understand on your perspective, which one was the toughest challenge on your side?
yeah, I think, look, definitely, and everybody says the same thing, but it's also because it's true.
Hmm.
The hardest challenge is the talent and HR challenge.
Hmm.
Um, and I would say that there are two levels with that.
Hmm.
When you are the CEO, you have the first level, which is to allocate resources between your different muscles, if you will.
Hmm. Yeah.
So your CTOs and CPOs will always ask you for more resources to manufacture things and run it. The go-to-market guys will always tell you how much more they could achieve in terms of growth if they had more marketing budget, if they had more product marketing people, if they had more partnerships. Your customer guys will always show up and say, "Hey, now we have all of those projects to deliver.
Hmm. But we
and
need people,
twice,
we need
yes, yes,
resources.
customers live. So and 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 then the foundational resources will be like, okay, now we need to hire that many people. We can't do it with 2 HR people.
Mm,
FP&E guys, we have so many things to analyze and pricing, whatever. So we need to scale that up as well. So I think the first level is really like to delineate what are the areas of your business at a
mm,
certain point in time that needs the most resources allocation and why. So in a way, and this is probably the segue between my investor role and my CEO role,
mm,
which is, as a CEO, with regards to HR and talent, you are a capital allocator.
okay.
So resources is capital, and therefore you need to monitor and allocate those resources to where it matters the most, looking for ROI.
Mm,
And I think from that perspective, the investor hat is not that far away from the CEO hat.
mm,
Now, at a granular level, which is the level 2 in my mind of the analysis, you have to build a cultural framework for your entire organization to look at the talent pool the same way.
mhm,
And that's really hard to do because and I had those issues before, and I still do, which is that what do you define as an excellent team member?
mm,
What is a good team member, and what is a low performing team member? And if you start debating like on the details, oh, he did this exactly, and you don't have the tools to actually assess that. uh, how can I define if a developer is a good one just by talking with the CTO? It just doesn't work. So you have to anchor your analysis framework into very tangible frameworks in terms of outputs,
mhm.
outcomes, and fit towards a cultural value framework that you have to put in place as the CEO. So I think as CEO, if there was only one job that you should do, is head of HR, if you will. If
That's
I
an
had only
interesting
one
take.
job to do, it would be probably head of HR.
And you still lot of very good points, to be honest. Like you're basically dealing with hiring like it was an allocation problem in terms
Yes,
of resources. So this
yes,
is very interesting on itself. I was wondering if you're still involved in that process, like you want to
I
meet
am.
each one of them, or you're maybe doing the last interview, something like that.
Yes. So uh, I I tend to see every one of the new hires. Okay, 80% of the cases. Now, when I can't, one or two people I trust with the cultural values in the company would take over on my behalf, if you will. But I like to meet for the last interview all of the all of the hires.
Hmm,
I meet uh, all of the hires once done for 2 hours in small groups for every vintage of people hired, just to make
nice.
sure they hear from me how I think about the business, how I think about cultural values, and make sure that I am part of their onboarding one way or another. For strategic hires, uh, I don't know if we need a new VP marketing or something like that. I also do much more involved things. I may be looking for people myself
Hmm,
because I think at the highest level, people need to uh, hear the right story and they come work a bit for you. Um, and therefore, you need to spend the time for that to convince
hmm,
them why, because you operate on a competitive market. Those
yep.
guys, they bring their own supply, which is their talent, and they will trust you with that supply. And therefore, you need to be able to demonstrate that the demand for that supply actually makes sense, not only for you, but also for them. And if I can't make the time for that, what else could I do?
Yeah, no, it's a very good point. And so you do that in small group, not one-on-one. So you don't want to meet each one of them personally. You want to like have a short overview of what you're
So
doing.
yeah, so I meet them as part of the hiring process,
Hmm,
1-1, obviously, as the last round, if you will. And then once they are hired, I meet them in small groups so that they can ask their questions
Hmm.
down the line. I try to do one when I can, but at the point it becomes just too much in terms of
Yeah, yeah, of course, of
how
course.
time you have
You
to
still need to do,
yeah,
allocation resources even in with your
yes,
time. So it makes a lot of sense. But yeah, I think that you made also very interesting point. So allocating resources is kind of easy on one side because you have data, you know the kind of priority that you have, you know everything there basically. But you mentioned something that in my opinion is way more tricky than that. That is actually measuring which one of them will be a top
hmm,
performer and which not.
yeah,
That is kind of complex because you can actually have a very good hire, a person that is perfect for the role and everything, but maybe they're going through a strange period in their life, or maybe they're not
yeah,
very well allocated in the role, and maybe they perform like a low performer. But it's just a
exactly,
problem of alignment there. So how
yeah,
do you actually measure those kind of things?
yeah. That's the hardest thing, to be honest. And I would not pretend like I cracked it completely.
Hmm.
Uh, I think like there is one thing I'm sure about, uh, is that you need to achieve 100% alignment in terms of cultural values
Mm.
and expectations for people with your n minus one at a minimum. If your n minus one talent radar is broken
Hmm.
for hiring, onboarding, and assessing, and when I mean broken, it's not necessarily negative, but what I mean by that is just misaligned with you, you are never going to go anywhere. Because
Mm.
even like what you believe are great talents, if they operate in a contextual context that is not in line with your beliefs, it's never going to work out. And the whole cultural framework is going to go under. So I think like being really sure that the n minus one people you work with fully align with your ways of doing things is absolutely essential. And I think there are really like one quote that was said to me once. Um, I don't remember exactly by whom, but it really like stuck with me, which is a saying that says, if you grade people from 0 to 10,
Mm.
7 higher 6 and 8 higher 9.
Okay.
So once it's a bit brutal, but that's the reality.
Yeah, yeah,
So
I can understand.
once you understand that, the first thing you need to make sure is that you and minus one are at least 8.
Mm. Okay.
So then they will cascade that down and making sure that everybody down is going to hire people who are better than themselves.
Hmm.
And then you get to a virtuous cycle where you will incrementally, your organization, your system will become incrementally better
Hmm.
without having you to actually go down to the factory and say, hey, that guy, this guy, whatever, and naming people like you don't know. So you need to create the cultural understanding for that and the shared understanding towards the importance of HR and each of your minus one to be themselves HR
Mm.
directors consistently with the way you look at things. If you don't have that, very quickly, either you lose control on the base
Mm.
or you
Yeah.
start fighting with minus ones
Yeah.
or both, and you waste a lot of time and resources.
It's a very good point. So you basically are implementing a kind of culture where everyone is looking for excellency, So they need to
Yes,
find someone that is as equal or even
themselves.
better than
Yes,
them. Otherwise, you don't hire.
exactly.
That's a
Exactly.
very good
And
point.
and when you start doing that, Michele, I tell you, like if you keep people accountable for a certain level of outputs and outcome, they will cascade that down.
Hmm.
And if you avoid complacency with regards to that, it will cascade automatically because nobody wants to be held accountable uh, like alongside uh, lower performers, and
Hmm.
there is no judgment in that. It's just like nobody wants to compensate or take the hit for others if they just don't do the effort or don't have the right
Yeah.
level of expertise. And therefore, the system itself starts to click and clip for incremental excellence. You don't achieve, and I would not say we are excellent everywhere. This is not true. We aspire to be, and you need to set in place a system that himself fuels and clips and clicks excellence points on
Mhm.
a daily basis. It doesn't matter really where you start. Like every
Yeah,
day,
yeah.
we need to be better. There was this excellent paper that was written. Maybe you read it, in terms of the mundanity of excellence.
Yeah, I read it.
It's a paper in the US
Yeah.
with the swimming category, where they really looked into like what drives excellence in swimming. And in fact, it's the compounding effects of a lot of small things done consistently and looking for daily progress. Uh, and that's really the mix of all that drives, in the end, very significant differences in performance. So there is no like hero. You don't wake up one morning and say, hey, I'm stronger than the day before. It doesn't happen that way. It's really the compounding effect of
Yeah.
all of that. And I think if our company was just a national swimmer, but we need to achieve the same level of process in order to drive
Mhm.
incremental excellence points.
Is the like consistency of those kind of effort,
Yes,
doing
yes,
that day by day that makes
yes.
the real effect in the end. No, I totally agree on that. Uh, Coming a little bit more in the market direction. So, um, you're coming from a very strong financial background, and now you landed basically on fintech. And I would like to understand your perspective on the market. On top of that, you are working on the core banking side of fintech, so that is even a little bit trickier than usual things. So I would like to understand your point of view on the fintech market overall, and more
Mhm.
specifically on the fintech market in Europe. And in my opinion, is right now on a very good trend, very good momentum. But I would like to understand your opinion coming out of it.
Yeah, absolutely. So I think there are really like two broad categories as part of fintechs.
Hmm.
Um, there is the B2C category
Mm,
uh, that has its own, goals, outcomes, value proposition, and economics. And when I mean B2C, it can be obviously business to SMEs or business to corporates. Doesn't
yeah.
matter. It's just serving the end market. Um, and here you have like the Revolut and the Monzo in the UK, or the Conto
Hmm.
of the world. Um, and the second category is really like the B2B space. Um, so people like us, who throughout services, or in particular for us, software, uh, enable the transformation of the financial services space, either serving the fintechs in the first category, so fintech of fintech, if you will,
Hmm. Yeah.
or serving more traditional companies in demand for modernization um, throughout software. And that's in particular what we do. So I think um, both categories are now growing at a significant clip,
Mm,
uh, but with very different fundamentals in terms of business.
yeah.
If you look at the B2C, or direct to customer side of the table, um, it's really about branding, marketing to start with, developing a muscle to acquire customer at a relatively affordable price. It's about differentiation with regards to legacy players. It's about finding your niche
Hmm.
and scaling out of that uh, with the right basis in terms of product and technology, which is what Revolut managed to do extremely well. And on the B2B side of things, which we are, it's very different.
Hmm.
Uh, Obviously, you have not that many customers. You are not serving directly the masses, but you are more serving buying points that intermediate yourself from the end customers, and therefore you have longer sales cycle to shoot for, and you really need to craft an enterprise grade kind of approach in order to be successful at doing that. Um, and I think when you do that, which is our case, you can really build a very interesting positioning um, within the ecosystem, which is a bit like a segue at the cornerstone of both worlds. Um, for instance, for us, we are both helping the disruptors, so the fintech, to scale up,
Mm-hmm.
as well as the legacy providers, the legacy companies to catch up. And in a way, each of those categories, they choose us because we succeed with the other ones.
Mm-hmm.
So the fintechs, they like to work with us because we also work with banks. So we know very well about banking products. We know very well about regulatory frameworks. And the banks like to work with us because we've been successful with fintechs. And therefore, they feel that on our behalf, on their behalf, if you will, we provide to their end customers the level of competitiveness they need. And I think that's interesting.
Yeah, I think that you've touched a couple of very interesting points. So first of all, I strongly agree with the kind of distinction that you've been mentioning about B2C and B2B in fintech today. um, we've all been through, that kind of period where B2C were, the place to be, and everyone wanted to invest in B2C and fintech because it was kind of easier, because you could have just, raised a couple of millions just with a very good PowerPoint, mentioning a lot of acquisitions and everything. But then I think that we are now in a period where you need to have more mature venture. Building a B2B is kind of harder than building a B2C, and it involves a lot of different kind of relationship and different kind of structure and developments. Because the kind of people that you are talking to and you are selling to, they require specific processes, specific technical specification, requirements, and everything. So it's kind of harder to actually sell to B2B. And the second good point, I think, is the one that you've been mentioning about starting from fintechs themselves, because it's kind of easier for them to understand the kind of product that you have because they're in the same place. And then you scale up to actual banks that have, of course, different kind of background and different kind of technical specifications. So I think it's a very good strategy, very good point. Um, maybe it's kind of let's say easy to answer, but how hard it is today to sell to banks yet, because it has been a nightmare for years, selling to banks because they have 15, 18, or maybe or even 24 months selling cycle. So how it is today, in your opinion, selling to banks?
Yes. So I'll take this question, Michele. If you allow me, I will just come back on something you
Sure.
said, which I think is really resonates with me, and then I'll go back to your question. Because I think the distinction between fintech B2C and fintech B2B, or B2B2B, or B2B2C, doesn't matter,
Mhm.
but is extremely important for the following reason. And this is probably my investor hat that makes me articulating it this way. Uh, in a way, at a fundamental level, uh, those two categories are very different businesses.
Mhm.
So there is more difference between us and Revolut in terms of the business fundamentals than there is between Revolut and BNPP, or between us and I don't know, Shift Technology, or any other B2B software company, or somebody operating as a B2B software provider to the construction space,
Mhm.
okay, if you will. Um, which means that I think for a very long time, investors have been assessing and assessing their investment philosophy into fintechs as tech companies. But in fact, when you invest in a direct to customer fintech business, you don't invest in a tech company.
Mhm.
You invest in a bank, which is tech enabled.
It's a good point.
And therefore, in terms of economics, it's very different. When you invest into Klarna, for instance, you invest in a credit business. So they do it extremely well. They do it with a lot of differentiators, but in the end, there is credit risk involved, there is liquidity risk involved, and therefore you are investing into a company involved in credit in a tech-enabled way,
Mhm.
for sure, but you are investing in a bank. When you invest in a bank as a service business, which is somehow in a way on the B2B side, in fact, you also invest in a bank. When you invest in Solaris or companies like that, they are banks in
Yeah.
some ways. Uh, and so, therefore, the fundamental economics of the direct to customer space and the BaaS space are not purely software fundamentals. I'm not saying this is good or bad. I'm just saying this is a very important
This
aspect.
is the reality, basically.
And we are ourselves, we are not regulated. So we are an enabler for all of those guys to operate their business. And therefore, we are a pure play software company. And therefore, the sales cycle, coming back to your question, that we have to go through is a B2B software, enterprise grade, mission critical journey. Point. And now, directly to your question, yes, selling mission critical software to the largest banks on the planet takes a lot of time, a lot of credibility, a lot of capabilities, and a lot of effort. And this is why when you look at the market landscape, you don't find that many mission critical scale up B2B software which manage to actually convince the biggest bank on the planet to work with them. Because this is hard. So yes, we go through the 18 months sales cycles. Sometimes it's a bit shorter, sometimes it's a bit longer. It tends to be way shorter once you have a foot in the door. For instance, I have a very big customer I'm working with. It took me 24 months to convince them to work with me. But every new project I do with them, it's more like a 3 to 6 months because the whole trust bar, in a way, and the barriers to entry are behind us. And I would say that the adoption by banks, in my mind, is going to accelerate. And I think the reason for that, probably I should pay some lead generation commissions to Revolut, because the pace at which Revolut is now growing drives concerns by the bankers and the CEOs, which is like, okay, now we need to respond strategically. We just can't be waiting for that wave to be higher and higher. In a world where the overall valuation of BNP Paribas now equals the one of Revolut, or the other way around, globally. So it's a huge shift in value. So you have to do something about it. And all of a sudden, technology and banking tech shifts from becoming a boring CTO kind of discussion, if I may say so, to being a stay awake issue for CEOs. And this is what drives really the breakthrough in the market, where I have discussions now with CEOs. Obviously, the CTOs are involved. I'm not saying this is, but the decision making and the consideration of the importance of the topics is now a CEO issue. In particular in Europe, where it took a lot of time to go there, and I think this is a huge shift in the market that I see.
This is very interesting, to be honest, because I thought that that was already the case in certain kind of situations. So I thought that for certain banks, incumbent like Revolut or Nubank in Latin America, were already, one of those kind of issues that you need to take track of, that you need to take in consideration. But if you say that that shift is happening right now,
it's accelerating at least.
Yeah, of course. I would say that my first guess is maybe it's a little bit too late to take that into consideration now, because you have banks going global, first of all, with hundreds of millions of customers that are way faster than traditional banks will always be, probably. So it's kind of a big issue for them if they're taking into consideration that only right now.
Yeah. So a few things on that, Michele. So it's nuanced. I'm overstating it for the sake of the conversation.
It's a very good point, in my opinion, and I totally agree.
There are some nuances. I think what I see is that the banks that have been exposed to really vividly the threat of the disruptors have probably an advantage point.
Okay.
And when you think about the global Spanish banks, the Santander and the like, who've been challenged in LATAM by Nubank and those kind of brands very early on, they move way quicker in their technological transformation going forward.
Yeah.
I think in Europe, the barriers to entry for the neobanks are still a bit higher. The strength of the traditional banks franchise are also pretty good. Um,
Mm,
like they know the terrain very well. Customer base is very sticky. They have a lot of products. They have a lot of trust from the people. So I think that they have a little more time to react, or they had a little more time to react, um, which is both a strength and a weakness, because now that's accelerating in terms of the threat. Like, did they move fast enough? That's questionable.
mhm.
But at least the defense is probably easier to orchestrate.
Mm. I, I think this is very interesting, but I was thinking about the kind of, let's say, defense that they could put in place and the kind of moment that we are witnessing right now. And I think that you made a very good point. So we have a couple of countries, let's say, where those kind of banks reacted in a very different way. Like, for example, you made a very good example with Spain. In Spain, you have Santander, you have another couple of good players that they actually reacted pretty fast. If you see, for example, what Santander is doing with Open Bank and what they're doing, for example, in Latin America, they actually are already fighting back. But if you see the same, for example, in Italy or Germany, you see old traditional bank not reacting at all. Like,
Mm-hmm.
for example, in Germany, you have M26, of course, that is one of the major neobank in Europe, but you don't see Deutsche or Commerce or all the other huge banks actually fighting back. They're, still the same. And Italy, you have the same exact example, like you have Intesa, you have Unicredit, but Revolut scaled to 3 million users in like a couple of years.
Mm. No,
And,
yeah.
you know,
I think, yeah, I think that's a very good point. I think Intesa took an interesting corner, like with their, I think, Easy Bank
with Easy Bank, yeah.
project, uh, and I think that's interesting
Mm,
as a trend. It's pretty isolated in terms of initiative. I think Germany is exactly as you point out. And I'll tell you something as an insight. I think that German banks themselves
mm,
are being challenged by the disruptors. That's been the case. It's already in
yeah.
place. But I think they are going to be challenged by the fastest movers in terms of the trad banks coming from the outside.
Mm, that's an interesting
And I
one.
think that's a big problem as well, because just don't take me wrong. I think I'm not preaching for the traditional banks to disappear. This is not
Hmm.
going to happen.
Of
They
course.
have very strong franchises. Um, they have scale. They have expertise. So I think they are here to stay. Now they need to move. And when you look at what's going on in Germany, I think BBVA opened uh, a franchise in
Yeah.
Germany. If you open Crédit Agricole strategic plan that was released the last week, they are going aggressively after the German markets
Hmm.
based on modern technologies. Um, and I think the list goes on. So if you are a German bank, now you have to deal with the competition of disruptors, Revolut, N26, and the like, and Trade Republic, by the way,
Yeah.
which completely disrupted almost even the private banking
Which,
space.
by the way, in my opinion, is one of the strongest competitors there,
One of
more
the
than
strongest
N26,
competitors.
in my opinion.
Yeah, much more. N26 is a bit. I mean, it's no secret that they are living through a bit of tough times.
Hmm.
I think Trade Republic has a very differentiating value proposition,
Yeah.
going after the savings and therefore attracting high net worth kind of
Hmm.
households, which I think is very strong in terms of
Yeah.
branding as well. But now, not only there is those guys, Revolut and 26, but also um, European banks attacking the German market, where there are 80 million people there with a lot of money because the Germans are saving a lot. And I think that's a challenge.
No, I strongly agree, to be honest. And I think that uh, we didn't saw yet those kind of banks pushing back because probably you made a very good point in the beginning. they didn't saw those kind of newcomers as a potential threat. They
Mhm.
saw them as competitor, yes, but not as real threat. Right now, they face the reality and they see that there is a threat in the market, and the threat is becoming bigger and bigger. And yeah, it's going to be very interesting to see how they will react. To be honest,
Yes.
and it's going to be a very tough challenge for many of them. I think that probably one of the, let's say, hardest market for neobank at the moment is still the United States. We
Oh, yeah.
still didn't saw a real champion there. We still didn't saw a US based champion. We still didn't saw no one, either Revolut or Nubank or the big ones, really having an edge in that kind of market. That is still the biggest market by numbers by far, where you still have a very traditional banking system that is still anyway very innovative, because you have Bank of America, you have JP Morgan, you have Goldman, all of those kind of banks that are investing billions and billions in the technology side, and producing innovation. So probably that one will be kind of a niche over there and kind of an exception, but everything else is going to be a war to actually
Yeah.
acquire those customers.
It's the I lived in the US myself.
Hmm.
The banking market is very particular
Mm.
for a lot of reasons. Um, Paradoxically, I would say the customer experience is not great. Opening an account. Okay, I was French, so it was even more of a challenge. But
Hmm.
there is still a lot of paperwork. It takes
Yeah,
forever, and so that's one thing. I don't think the customer experience is there. Secondly, you have this credit score kind of system,
yeah,
which is basically the alpha and omega, as we say in France,
yes,
of everything over there. It's all about the credit cards and how many points you get and how you score your risk and the buying power of credit cards is basically driving the market. So that's one aspect, which is very hard to replicate for companies coming from the outside. Secondly, I think the market was very fragmented historically with the community banks and all that. I think we are more bending towards concentration forces. So
mm,
if you look at growth rates in the retail bank market in the US, I think the biggest banks are growing faster than the smallest ones.
mhm,
So I think there are concentration forces. Um, and therefore, between the community banks, which are really like community anchored, legacy, but community anchored and getting smaller and smaller, and the huge banks like GP, Chase, and so on, uh, who are investing billions to transform, the mid-market for digital banks to emerge, given the market structure I mentioned, as well as the flavors in terms of products, makes it a very difficult equation to crack. Um, and I think it explains why, like, given all of the money that there is in Silicon Valley, etc., I guess that a lot of people like Chimey and so on
mm.
try to build those franchises, but at this point, I would not say failed because they achieved something, but
Yeah. They
kind of,
didn't exactly fail, but it's not
but they
exactly a
didn't
success
succeed like that.
anyway. Yeah, yeah.
So I think like Nick from Revolut said in a recent podcast that he wanted to be a leader in the space in the US, so he's going to invest massively, and maybe he has a shot. Uh, but Revolut is still very nascent in the
Mm.
US in terms of brand awareness, in terms of product fit. So I think the US is a very very specific and
Market.
hard
Yeah.
to penetrate animal. And if you look at the mirror of that in the B2B, because we spoke about the fintech
Hmm.
B2C, now if you go back to my distinction in terms of the fintech B2B, it's also very hard to scale onto the market opportunity in the US.
Yeah.
And this is why, if you ask me, even if my investors are New York based and I know myself a bit the US, we 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 haven't made a decision yet to go there, and we are really about building a pan-European next-gen core
Hmm.
banking because I believe the forces there for adoption are stronger, uh, and going after the technological transformation of the US market with a B2B software proposition is very, very, very hard. And if you look at the historical success of scale-ups in the banking tech space, very hard to penetrate.
Yeah.
And whenever something pops up, the old guys, Jack Henry and the like, they will go and buy it very quickly, a bit like Facebook with the emerging media companies in the
Yeah.
Silicon Valley, but in the legacy field, very hard to make it work.
And I also think that we are kind of witnessing a little bit of an aggregation wave right now,
Yeah, yeah,
mostly in fintech, mostly in certain kind of
yeah.
sector inside fintech, like stable coins, like infrastructure. So I think that we are kind of witnessing that right now. But yeah, Martin, it was a huge pleasure to have you here today. It was a very, very interesting conversation. So thank you very much for all of your insights. And yeah, good luck for everything that you're doing with Skaleet. I think that you are doing a wonderful job.
Thank you, Michele. Thank you for having me.
Thank you. It
Have a
was a
good rest
pleasure.
of your day.
Bye bye.